The Indian stock market is on a massive bull run since April 2020. There is an explosion of foreign and domestic investments into equities, triggering record highs in major indices. However, even before 2020, the Indian IPO market entered a long-term bull run, comparable to the 1990s boom. The market volatility induced by the bull frenzy helped businesses get better subscriptions and a chance to list their shares at a premium. This video takes a deeper look at why Indian companies are rushing to go public. During the 7 years between 2015 and 2022, a record number of companies went public to capture the easy money flowing into the market. Some of the biggest IPOs during this period are Mart, Dr. Lal PathLabs Limited, SBI Cards, and Life Insurance Corporation of India. Most of these companies gave handsome returns to investors, triggering more interest among mom-and-pop investors. However, retail investors are not the only ones participating in this great game of IPO. To understand the boom in Indian IPOs, we need to understand the supply and demand dynamics of the market. The supply is provided by new companies going public. This trend gathered momentum in 2021, when the Securities and Exchange Board of India, or SEBI, relaxed several listing provisions. These moves have helped startups like Paytm, Zomato, and Nykaa get faster clearances from the regulator and easy access to investor funds. The demand for these shares was provided by high liquidity in the Indian markets post-pandemic. This liquidity came from both domestic and international investors. On the international front, China started a massive crackdown on its tech companies back in 2019, spooking foreign investors. India is considered a great alternative to China due to its massive population, which can provide cheap labor to fulfill global capacity. Money is flowing out of the Chinese economy, and businesses in India, Korea, Taiwan, and the Philippines are dashing for the outflows. India also underwent 3 key structural changes with the implementation of the Insolvency and Bankruptcy Code in 2016, the introduction of Goods and Services Tax or GST in 2017, and the lowering of corporate tax to 25% in 2019. These laissez-faire changes in the economy reflect a move towards capitalism from a socialist base, boosting the confidence of investors. The government further moved towards capitalism with its asset monetization scheme, which aims to privatize several non-strategic government companies. During the 20th century, India nationalized key industries, taking control over banks, airlines, shipping, and telecommunications. However, after the liberalization of the Indian economy in 1992, the government followed a steady policy of disinvestment. Several big government companies were taken public during 2015 to 2022. This list includes IRCTC, Hindustan Aeronautics, LIC, Garden Reach Shipbuilders and Engineers, MSTC Limited, Mazagon Dock Shipbuilders, and Bharat Dynamics. There is also a trend of loss-making companies launching IPOs at a premium, as the bull run induces greed amongst investors, convincing them to pour money into riskier companies. This can be a trap by promoters to dump their loss-making investments on retail investors. A vibrant capital market with thousands of listed companies from all sectors of the economy is one of the hallmarks of a capitalist society. As the Indian economy inclines towards capitalism, we may get to see more companies like Delhivery, BIJU, PharmEasy, Ola, Oyo, Pine Labs, Swiggy, and Flipkart get listed in the coming years. Thanks for watching. If you found the content useful, please give us a thumbs up and subscribe for more.